Today, we're exploring 5 key investment areas for 2024. Get comfy and let's get right in. Now, let's talk real estate. We all know that real estate has always been a popular investment. But what if you don't have the cash to buy a property outright? In 2024, you have other options like REITs, real estate investment trusts, or crowdfunding platforms. REITs let you invest in real estate without a hassle of buying property yourself. You're putting your money into a company that owns and manages income generation properties. And the best part, REITs typically pay higher dividends because they must distribute 90% of their taxable income to shareholders. Take V&Q, for example. It's a popular REIT that gives you a slice of many different real estate assets. It's like owning a bit hundreds of properties across the country without headache of being a landlord. If crowdfunding is more your style, platforms like FinRise let you team up with others investment to get in a real estate projects. You can start with as little as $1,000 and still get some real estate action. The key here is that your money is investment in physical assets, which tend to appreciate over time. But remember, real estate isn't as easy to sell as stocks. You can't just sell a house in a day. So if you're okay with chopping up the money and owning the piece of the property market, real estate through REITs or crowdfunding could be a great addition to your portfolio. And don't forget the tax perks of real estate investing. You could benefit from mortgage interest, property taxes, and depreciation deductions depending on your situation. These tax breaks can make real estate even more profitable. In 2024, real estate is still solid bet, especially as the market calmed down after the pandemic. Let's talk about creating a stream of passive income, and one of the best ways to do that is through dividend stocks. These are stocks from companies that regularly share a portion of their profits with shareholders. It's like owning a rental property, but instead of collecting rent, you're collecting dividends. Dividend stocks are great because they give you a steady income. You can reinvest it to buy more shares, and over time you can really add up. It's a classic strategy for building wealth, especially if you're looking for a less risky way to invest in the stock market. For example, funds like VIM or CDY focus on companies with strong record of paying dividends. By investing in these funds, you're essentially setting up a system where your money works for you, generating income without having to do anything. And over time, as these dividends are reinvested, your income stream grows, leading to significant wealth accumulation. But here's the catch. Don't invest in any dividend payment company. You want to look for companies with a stable and growing dividend history. This way you're doing homework pays off. And while it might sound boring, remember, the boring often means reliable, primarily when investing. And don't forget the tax perks of dividend investing. In many cases, qualified dividends get taxed lower than regular income, making them even more appealing for building wealth. Plus, dividend-paying companies tend to be more stable and less volatile than non-dividend-paying stocks, which can cushion during market downturns. It's a win-win strategy that should be a part of any well-rounded investment portfolio. Thanks for sticking with me till the end, and if you found this video helpful, check out my last video. Don't forget to like and subscribe. See you next time and happy investing!